Guys, welcome back to the channel. Welcome back to a new video. This is without a doubt the most important video of this week because all eyes are right now on Jerome Powell. He's going to speech at 10 o'clock local time, Wyoming, in Jackson Hole, where a lot of important bankers and central bankers are coming together to discuss the economical outlook. And I think what he's going to say today is going to move the markets the next couple of weeks or months, and with that information we can trade accordingly. I'm going to show you exactly what I mean, but not before I've asked you to smash up the like button, subscribe, click the bell, click on all so you don't miss anything. Leave me a comment or share this video with your friends who think that it's useful. And without further ado, let's start diving in so I can show you exactly what I mean. So this is the BTC USD chart on the 1 hour, but what I actually want to go to first are the interest rates for the central bank in the United States. So the Fed interest rates right now, we are approximately at 2.5%, and I do not expect that when Jerome Powell starts to speak he's going to rise the interest rates. That is something he will leave for in 2 weeks from now when they have another interest rate hike. Everyone is expecting 0.75. We just had kind of peak inflation in the last month, but the inflation still is pretty high. I am not 100% convinced yet that it has peaked out because oil dropped down quite significantly in the last month, and therefore inflation came down a little bit. So maybe if oil starts rising again, then I can imagine that inflation goes higher again, and then there's a base to at least have 0.75, but maybe even more to rise the interest rate with. So like I said, I do not expect that he will say anything about it. Most likely he will say something as in, we're waiting for incoming economic data. It will be a last minute decision, unanimous, yada, yada, yada. Actually the same stuff as always. But since the labor market has been pretty good, I think a lot of people are expecting maybe that they will ease out a little bit. Then there's another problem where everyone is looking at, and that is the dollar, because the dollar is tremendously strong lately, and that is causing a problem for the rest of the world. So what is expected that all these people who are now coming together in Jackson Hole will pressure Powell to say, hey, dude, your dollar is so strong, it is hurting us. Why? Because everything in the world is paid for in dollars. Oil is paid in dollars. Gold and silver is all dollars. Most commodities are paid in dollars. So since this is the world reserve currency, and if it gets so strong, then for other countries it is hurting their business, and also of course for the United States hurting the business because it's harder for people to pay all of their bills in dollars. Now we talked here about the double top in the dollar index. So what we're hoping is that this might come down a little bit, and then there is room for Bitcoin, for the traditional stock markets to go up in value, because we also have seen, for instance, other commodities like gold and silver lagging tremendously because that dollar is so strong. So that's going to be interesting to see what is the tone of the Fed. That is one thing I'm looking out for. And the other thing is the R word, recession. If he is going to mention the word, we might get into a recession, and this would be the time to say so, shit hit the fan. Trust me, shit is hitting the fan, because a lot of times I said the inflation will be transitory. Oh, we're gonna have a lot of we're gonna have a high inflation. Now people are saying, are we in a recession? Are we not? I do believe we're 100% in a recession. We have 2 quarters in a row negative growth. That is, in my book, a recession. But it's a little bit dangerous. Don't say it yet. And now we're like, oh, maybe we need to rephrase that a little bit. But I think once he is going to name the word, we might most likely go into a recession. Then I think shit hit the fan, all the markets will dump down, a dollar start rallying up again. What I am looking out for right now is if this dollar index will get another attempt to get above 109. If that happens, then I really expect 112, 120 in the next couple of weeks. If that doesn't happen and this goes down, like I said, then for the stock markets there is room and space to go up. Interesting to see for the S&P 500. Yesterday we had a late night sprint, meaning that this green candle was really put in place in the last few hours, and as you can see we are above the most important resistance, which now flipped into support again. And also we had 2 days in a row where we kind of tested that resistance, and now on the third day we went higher. Also interesting, because of yesterday's pump, the week right now is a little bit in the green. Well, actually it's still in the red measured from here, but this was the opening gap on Monday, but it is looking pretty good. do have to say this maybe looks like it maybe wants to roll over a little bit. What I saw here on the daily is that the money flow might want to curve up again. VWAP is going higher, and we have to say this momentum waves can also curve up. Usually when the RSIs come together, then they stay here for a little bit, and then we can expect that the markets are going higher. If that happens, Bitcoin will definitely go higher. Like I said, it's really depending on the tone. If that tone is very hawkish, so he says, oh, you know what, we were maybe, our tone was maybe a little bit too dovish, as in too monetarily relaxing, as in we'll be okay, no recession, if something happens we'll act accordingly. But if he says, hey, listen, the labor market is strong, we need to tighten further. If we tighten further, worst case scenario, we're getting a recession. Boom, that's it. We're going down, we're dumping, and then I think BTC will definitely drop much further. Then, to be honest, I also don't know, but like I said, I prefer scenario to go to the golden pocket, sweep out the lows here. Let me take out the VWAP, sweep out the lows here, and then going higher. I don't know, to be honest, if that is then back in the cards, because if the news is very negative, and you can see that the trading range for the entire week has been just a few percent. It's actually pretty crazy. We just had 4% the total range. So this is a very tight trading range. I don't know yet if that's going to hold. If it doesn't, then I'm actually looking out for the very lows here for BTC. That is the value area low, approximately 19K, and I would not be surprised if we are going to start testing these lows. Not our preferred scenario that I also mentioned already many times before now this week. Really, the preferred scenario is us first to go lower again, sweep these lows, get to the golden pocket, go higher again to approximately 23, 24K, and then start building up a short from this level, and then maybe trade it lower. Why from this level? Because this is the value area high, as you can see, most traded volume here on the top. We also have a lot of wicks ups and downs, a lot of trading ranges, so that actually would be very nice if we can go there and then go lower. And let's say we go lower in approximately then also 2 weeks from now, that would also perfectly come together in the Fed's decision. So the tone of today's talk is going to be it. I expect a lot of volatility. I think a lot of traders this week have been on the sidelines just waiting for Powell, what he is going to say. Have to say, in the last 2 days, trading BTC was also not only difficult, but price was also pretty weak. If we're going to the dollar index, and we're seeing here, let me take this out real quick because it's getting a little bit messy. We're seeing here that actually we have been in a little bit of a downtrend also here. BTC was not really following to the upside, so that makes this just pretty weak. Also here, the S&P yesterday quite rallying up, as you can see. BTC was not rallying up as well, so we're really stuck in a little bit in this small trading range. I'm really hoping that we're leaving it ASAP so we can go to much lower or to much higher levels. Again, my preferred scenario would be go down 20,200, 20,500, point of control, golden pocket, sweep the lows, and then go higher. And that's also what I said earlier this week in the video. Are we first going to 20,500 before we are going higher? If that doesn't happen, let's say somehow for whatever reason it's going to be a good news show, and Powell is going to say everything to make our ears happy and to satisfy bankers and traders, then I think we can have a very quick move up, because here is barely any resistance on these candles, because this was a swift move down. So then a squeeze up and squeeze off the shorts to approximately 23K is definitely possible. I am waiting with trading before I am putting something in, because I would not be surprised if A, we're getting a lot of zigzags, or B, that we just get a huge short squeeze to the upside, or when the news is very hawkish, that we're getting a quick dump down. And then, of course, like I said, is my eyes on the price. Are we going to break this level that I'm looking out for already for a while, or are we going to go lower, sweep the lows, and then go higher again? It's going to be a lot of volatility, so that's going to be very interesting to see. Like I said, again, they will not most likely say anything about what we are going to do with the interest rates in 2 weeks from now. They will say we will wait for economic data. We don't know yet. We still have a CPI data coming out just a few days before the Fed meeting in September. That one is super important. They will definitely take that into account. But the target for rising interest rates is approximately 3.25, 3.5%, somewhere in the first quarter of 2023. Meaning that if they keep on rising the interest rates in the next couple of months, I think they will go then approximately to 3.5%, and will keep the interest rate there for a while just to see what happens. Because now they are just trying to rise the interest rates as fast as they can, and they don't want to overdo it by doing 1, 2, 3% right away. So they're doing approximately 0.75 month after month after month, and therefore they're kind of just waiting what the economic outlook will be. Some stuff will have a little bit of a lagging effect. For example, the housing market. Once the interest rate starts rising, you see that, of course, the price of mortgages, the mortgage rate, will then also go up, but the stock market will react maybe a little bit later. Working force will react much later. So they're kind of waiting. If we start rising the interest rates right now, what will be the effect in 3 months from now, 6 months from now? So they're trying to be a little bit careful with that. And I do not expect, even if the unemployment rate suddenly will go up, that then they will say, oh, then we need to start lowering the interest rates again. So I think they're really going to that target now with steps of 0.5, 0.75, then keep it there for a little bit, maybe a few months, no interest rates hike, and then maybe see if they need to keep raising again if the inflation starts picking up again. That's going to be very interesting to see. Like I said, one more time for the S&P, this 4,160 now needs to be support again. If we are going to dip below, then we're really having a little bit of fight here. And then eventually, depending on the news in the central banks, this will go lower or higher. If we are breaking it, you know my target, approximately 4,000. If we're holding it, then we can really start visiting those tops again. First this top, and then much higher, 4.5 or 4,400-ish is then something I'm looking out for, but we're not there yet, so let's take it slow. Everything stands or falls, not only with the Fed and the news, but then of course also the dollar, because it looks like everything in the world right now is tied up on the dollar. But I'm thinking, and I'm hoping, and I'm expecting a little bit that Jerome Powell will be a little bit hawkish. He will try to talk the markets down a little bit, and will try to kick off the traders a bit of the pink cloud in the last month. They thought, you know what, maybe not as hard as we think. The labor market's still good. Maybe they will stop rising the interest rates. I think that he is going to have a little bit of a harsher tone to say, hold on for a moment. We're not out of the woods yet. If we need to fight the inflation, if we need to be more aggressive on this, we will, until we have this under control. And that, I think, on that tone, on that news, the markets will go down. And like I said, for BTC, we'll see how far we drop or not. Right now, I'm standing on the sidelines, just observing. I don't want to be caught out in a short if we suddenly start pumping up. I don't want to be caught in a long if we suddenly start dumping down. That, for now, for me, is the trading plan. Hope you like these kinds of videos. If you do, then please do me a favor, like and subscribe. Follow me also on Twitter and Instagram. You will find those links also in the descriptions. Leave me a comment, or just share this video for once with a friend or a family member if you think this kind of stuff is important, this kind of stuff is entertaining, then you would highly, highly do me a favor. Thank you guys so much. Enjoy your weekend. See you in the next one. Bye-bye.